China's auto exports to Russia plummet. Policy shifts and market cooldown. China's automotive boom in Russia has abruptly stalled, with exports dropping 58% year-over-year. What was once a lucrative, high-profit market for Chinese automakers is now facing severe headwinds from tightening Russian policies and weakening consumer demand. This shift highlights how quickly geopolitical and economic conditions can reshape global trade flows. From opportunity to obstacle, the Russian market transformation prior to the 2022 Russia-Ukraine conflict, Chinese brands held a minor share of the Russian auto market, approximately 7%. However, as Western automakers suspended operations due to sanctions, a void opened up, which Chinese carmakers quickly filled. By 2023, exports surged nearly fivefold, making Russia China's top automotive export destination. Sales of Chinese brands exceeded 500,000 units, capturing nearly half the market. But this rapid growth was unsustainable. Starting in late 2024, Russia implemented a series of policy adjustments that decimated profit margins. Recycling fees for imported vehicles were increased by 70% to 85%, and import tariffs rose to 20% to 38%. These taxes effectively eliminated the price advantage of Chinese cars, which had previously thrived on low costs. Closing loopholes and crushing gray channels to further tighten control, Russia closed loopholes that allowed Chinese automakers to re-export vehicles through third countries like Kazakhstan, labeling them as zero-kilometer used cars to avoid taxes. This practice, which had fueled much of the earlier surge in sales, was effectively shut down. The crackdown also exposed quality assurance issues, as unauthorized vehicles often lacked proper repair services, damaging the reputation of Chinese brands. Economic headwinds and returning competitors compounding the policy changes, Russia's high interest rates, around 30% for auto loans, and persistent inflation have suppressed consumer demand. The average car price in Russia has risen to approximately $41,400, further deterring buyers. Simultaneously, foreign brands like Toyota, Renault, Hyundai, and Kia have signaled their intention to return to the Russian market, creating a wait-and-see attitude among consumers. The numbers tell the story. A dramatic slowdown from January to September 2025, new car sales in Russia decreased by 25% year-over-year. Sales of Chinese independent brands plummeted nearly 50% during the same period. Facing these market shifts, hundreds of car showrooms, including a majority of Chinese dealerships, have closed. Leading automakers, such as Chery, are proactively scaling back operations and selling off assets in Russia. The bottom line, the rapid rise of Chinese auto exports to Russia was a direct consequence of geopolitical disruption and a temporary market vacuum. However, policy adjustments, economic pressures, and the return of foreign competitors have swiftly reversed this trend. The situation underscores the fragility of trade flows in unstable environments and the importance of long-term sustainability over short-term gains.